Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind, these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. Alright folks, today I wanted to talk about some tools and rules that I've been using and how they've been working in conjunction with each other to, make pretty good profits recently. Nothing is forever, so I'm always reluctant to say, but this has been working for the time being, so I wanted to share. So let's first go over the rules. So these are the rules. I tweeted these out last Friday, I think, whatever December 5th was. Have no more than 4 open positions at a time. I function much better when I just have 4 or less swing trade positions open. It's something that I find manageable. I don't get overwhelmed. I don't get too scattered. And that way, if like 2 or 3 of them are going against me at the same time, I feel like I have the capacity to manage those pretty actively. Whereas if I get extended to 5, 6, 7, 8 positions and a few of them are going south, I have a really hard time sort of keeping up with the quantity. Except for extraordinary circumstances, take entries during power hour and make exits during the day. The extraordinary circumstance would just be if there's something really, really out of whack. Maybe the entire market gets some bad news and it starts to take a nosedive. Like that would be one. Or on the other end of that spectrum, some great news and it starts to jump up, and it makes sense to play off of that news. Or if I just can't trade during power hour, but I see some good opportunities, I take it when I can. But other than that, I just do better if I can digest the entire day, see what's happened by the time power hour rolls around and see what's coming in late in the day, and then make my decisions based on that, and then just worry about exiting the next day or subsequent days down the road. I know it can feel risky to some folks to hold overnight, but to me, everything is sort of like a give and take, right? I didn't mean to click on that. But anyway, rule number 3, be obnoxiously picky. Are all the criteria being met? So for example, I look for the price action to be close to support. I look for it to be close to the 12, 34, and 50 EMAs. So what that looks like is, sort of here, right? Like this is close to reaching, this is the 10-minute interval, FYI. This is what I look for to sort of sort these out late in the day for the EMAs anyway. So it's coming up to the 180 MA here, so it's overall slightly bearish, but it's close to testing that level. It's not too far extended from the 12 EMA, though it's not, super tight in on it. So it's a little bit of a mixed bag there. It's kind of sandwiched between these at the moment, but we do have bullish crosses with this 12 crossing over the 34 and the 50, and it is situated above the VWAP at the moment. And then on the daily, I pulled this 53.65. I always put my support and resistance on the daily regardless. Had this nice double bottom on the wick here. And so to me, that looked like it could be relatively promising. Sorry about that. The Weeble desktop app keeps freezing my laptop, and this is actually the second time I'm trying to record this video, and if I don't get it done now, I'm not going to get it out today, which isn't the end of the world, but I'd rather not continue to waste my time re-recording videos. But in any case, that's what I look for. Is it close to support and resistance? And, you can go about looking at other informative videos that I have on my channel or other folks' channels, or using your own sort of knowledge to plot those levels and use whatever sort of EMAs or MAs you want to look at to see if it's close. And this way, if it goes against you, you know it relatively quickly, like it loses the support level or what have you, and you don't let your losses get out of control because it hits that criteria pretty quickly. So that's what I mean by it being like close to the risk and reward that you want. That it doesn't have to fall like, 5% to hit your stop loss area. Maybe it just falls 1 or 2 or 3%. Is the flow at or very close to 100% in one direction? So that's particular to the tool that I'm using, which is Unusual Whales, and this is the flow that I'm looking at, right? So this is really bullish flow since the 15th of November. Today's the 7th of December, so additional bullish flow coming in today. I also have a slight bias toward these floor trades. I've had good luck with them in the past. They seem to be, for me, for the time being anyway, a bit better of an opportunity if I can catch them. So I look for those as well. But yeah, looking for the flow to be like very near 100% in the direction of the trade that I'm looking to take, meaning a call or a put. number 3 continued, is the overall trend of the stock and the direction of the flow. Has the flow been there during the day and continues to come in near close? So that's also an advantage of trading during power hour. If there's flow that's been coming in during the day and you've been looking at it all day, like you see Apple here earlier in the day, Lucid, AMD, right? And then is it continuing to come in during power hour, right? That's 332, 330. Right now it's 341. And so does it continue to roll in late in the day, and is it in line with what the flow was earlier in the day? Oftentimes that pile-on effect can be a pretty powerful indicator that there could be, something that someone knows about coming up, and can at least give you a better than chance, fighting opportunity to get a trade that goes your way. Rule number 4, except in extraordinary circumstances, if a stock has already run up 3% or more, do not enter a bullish trade, even if the flow looks more bullish. This is because I've been burned a few times, and I think it's mostly because unless it's like a super meme stock that has the ability to run 8% in a day and then another 11% the next day, and so on and so forth, just because of its meme status, absent of that, oftentimes, you may see a bit of a pullback, even if it is overall bullish, but it might really throw off your entry if you enter at power hour toward the end of a pretty big green day. I don't, for now at least, have the same rule with red days, just because red days, you probably are aware, stocks can seem to tend to go down much faster than they go up. It's that old adage of stairs up, elevator down. And so oftentimes if a stock is falling significantly, I will take it into consideration, but it won't be a deal breaker like it is on the bullish side of things. And lastly, don't feel like you have to make any trades at any point in time. And this is an important one to me. So if I don't, basically this ties back to the obnoxiously picky thing. So if I don't find something that fits my obnoxiously picky criteria, then I just won't take it. And that is pretty important for me because I often feel pressured to get the trades in and have my 3 or 4 there, tying back to the, no more than 4 open positions. But I feel pressure sometimes to have that hopper full. And so I try to remind myself, don't force a trade because you feel like you have to have a certain number of trades that you're currently engaged with. Now, how I use the tool. So basically, I use 2 views, this view and this view. I just have these 2 tabs open. I know there's others here, but that's just because I'm playing with some other things, because I'm relatively new to unusual whales. But basically, I set here are my filters that I set just today only. 50K premium, spot range 4, ask side only, calls and puts. I take out the ETFs and the indexes, 45 days to expiration. Differentiate range, I use 1, and out of the money only, single leg only. And then all that I do is I scan it, right? I look for things that continuously pop up. I look for things that come up as floor trades. And then if I find something that is continuously popping up, like you'll often see AMD and Apple, right? AMD is coming up here a lot lately. So then I'll come to my second tab, which has slightly different filters set. I don't put a time constraint on it. 30K premium, ask side only, calls and puts, still taking out the same things. 45, 1, same as the other ones, and out of the money, single leg only. And I look and see if it's really strong in one direction or if it's a bit too mixed for me, right? And these are all from today, 12/7. So this is pretty strong recently in this direction, but if it tends to flip-flop a lot during the day, I can get a little bit uncertain of these things for sure. And that's when I would maybe wait until very late in the day to see if there's strong indications of one direction or another coming in, within the last 10 minutes of the trading day. Maybe that would persuade me, maybe it wouldn't. But at this point, I'd go look at the chart and see even if sort of the price action fits my criteria. Is it up more than 3% today or not? Is it close to the risk levels, meaning a support level? Or the EMAs, is it pretty close into those so I don't get a really poor entry? And basically look at that. Now, the reason that I take these ones down here, single leg and out of the money only, is I'm trying to get away from finding ones that are hedges. And there may be better ways to do this, but I'm looking for ones that I can try at least to say, okay, this isn't somebody just trying to hedge against their position. It might be really impossible to know that you're taking those out, but to me that feels like it might give a fighting chance, but also I want to make sure that I don't get caught up in all these multi-leg trades. A lot of times you'll see trades here and there'll be 4, 5, 6 of them as part of a multi-leg trade situation, and they're buying some puts here and selling some puts there and buying calls here and selling calls there, and it's all one person's like complex trading strategy. I don't want to try to unpack that in real time and figure out what's happening, plus go look at the chart, plus go look at the single flow of that ticker itself. So to me, this simplifies and just says you're making a trade and it's clearly in one direction or another. It's not part of offsetting another trade or part of packaging a bunch of other trades together. And so to me, for the time being, at least, it seems like that sort of can help give a solid indication. But flow can still be wrong, that's for sure. Things can look really strong in one direction and it still goes the other. So nothing is a crystal ball, nothing is 100%, but I've found so far that this has been treating me relatively well. So I wanted to share it. But hopefully that's helpful to some folks, and hopefully you have your own rules and you follow them. But I gotta run. But I certainly appreciate you watching, and I hope your trading week is going well. I will see you in the next video.